What's up, investors? Ken here from the Dyslexic Investor, and we're going to be looking at Jim Cramer's 12 gifts that he wants to give the stock market to be able to be delivered in 2020. Let's go ahead and look at that list here. I'll put the link here in the description down below. So it's 12 items, everything ranging from what he projects that the market should do, the market conditions, what certain stocks should do, and so forth. So let's just start with number one, is the market runs higher and stockholders make more money. This is, of course, this is a very easy ask that I think a lot of people want. But then this is kind of tied to number two, is if the economy grows, inflation stays very low, and, quote, the single best environment for stocks to go higher. So a lot of these tie together because of 1, 2, and 3, and if the inflation and Jay Powell stays very data dependent, like his former predecessor Janet, that would be able to create a fantastic market for 2020 and have a fantastic growth time. Stocks with good managers with good management and growth prospects perform best. Yeah, that's very much true. So a couple of stocks that we can look at from that. What I think is Amazon. Like Amazon, whatever you say about Bezos, but he knows what he's doing. Another great company, Disney, Bob Iger, he knows what he's doing and his team. Another great company, of course, is Apple. They know what they're doing over there. Like, this has reached crazy high potential here, and you saw this on the Fibonacci retracement. It was hitting the 216 or whatever, 261, or like, it's crazy. This has been a crazy run. So this just jumps literally right back into the fifth. Investors own Apple and never trade it. So what he means by that is that you're not trading this. Like this would have been very hard to like on my trading mentality if I was in this, but I sold like at like 215 up here after that quarter. I should have gotten back in, but I put capital elsewhere, and I didn't want to potentially lose more money because I made a nice little run here over 2 or 3 months. But I was trading it. That's the thing. He's saying not to trade it, so you can see it holding the yellow line so pretty well. Like, did close below it once, but then potentially went substantially higher. Like, I'm sure this didn't look like it rocked out a lot of people, but look at that. Like 12 to, like, what happened there? Like, it just went down slightly. It touched the 5 exponential moving average and just continued to go higher. Like, this is super fueled by jet fuel, because this is a high potential for continue going higher, but it will run out of gas, and it doesn't mean it needs to come crashing down to the 200 again. Or through it. It just needs to level off. Like, it's sprint up a mountain, and once you're done sprinting, you need a rest for a little bit. So trading sideways or potentially even going higher is an opportunity. The thing I did want to look at too and give you some insight is on the daily chart. I use RSI with a combination of volume indicators and momentum. You see here on 3/21 this year, we kind of hit the top RSI. I use a little bit of a different settings. I use 80, not 70, on my top line RSI. So, meaning it's a little bit less higher for it to be overbought. So you don't get a lot of false negatives. So that being said, on 3/21, you see it kind of tap the red, and it kind of came back. So, but it came back to like the 21. Okay, yeah, this was a little bit different. That was due to a lot of short selling. A lot of people worry about the iPhone sales and so forth. But that's the past. Like, everyone knows that it doesn't matter about the iPhone sales anymore. It's more about the generating the service revenue and selling those darn AirPods to everyone. I was at the Apple store the other day. People were just buying those AirPods. Like they had these little trays. They're just constantly bringing them out, and then the people were just lined up to buy these. It was crazy. Yeah, sorry still for the cold. And then but this is what I'm seeing here. So this is like the 11-13 here. We kind of hit it. We didn't rise that much higher. We kind of stayed pretty even. Let the moving averages kind of catch up, and then we took off again. Like, I feel like that's going to happen with Apple. So once this kind of tippy touches the red line, see it coming around here, 275. I think I might be picking up a couple shares of that. Whoops, wrong screen. All right. Millennials keep investing with the help of trading apps such as startups like Robinhood. Yes, so Jim Cramer, I totally agree with this. More people need to learn how to invest. I actually read something regarding on how many younger people, like under 25, under 30, just don't trust in the market due to the financial crisis of 08, 09, and they just think it's all rigged and sha-la-da-la-la, and then it's not worth their time to try to pick winning stocks, which is it's kind of sad. And this is the funniest one. I think the Armageddonist or the very high levered bears need to be held accountable for their negativity and hurts individual investors. So this is what he's talking about. He's talking about a lot of people going on the show, different various YouTubers, different various people going on CNBC themselves, saying that our beloved Tesla stocks going to zero because they don't know how to make cars and blah 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 blah. So let me take a drink of water. That's going to zero. Just looking at a quick Tesla chart, like, well, don't get me wrong, like, we're pretty high on this level here, and momentum is starting to circle down. Again, that doesn't mean it's going to come falling down to the 200. It's going to slowly even off, like it happened here. Like, it had a huge monster quarter, kind of did a cup and then a handle and then another cup, and then it just took off. There was no handle, it just did a cup and it just took off on that. So let's go back here. And then there's going to be, he's talking about more mergers. There's just so many companies within cybersecurity. There's so many semiconductors that so many people know. There's so many retailer that needs to be brought to. So there needs to be more MMA, so more mergers and acquisitions. Did I say MMA? I said M&A. Mergers and acquisitions. I'm not talking about the Joe Rogan MMA stuff. They need to be able to find, so like the easiest way for companies to buy growth is to buy a company that's in their sector, or sometimes not even in their sector. And then this is the one that I liked a lot. It was talking about companies and bankers need to find higher quality IPOs, because if you bring crap into the market, it's not good for anyone. I'm not saying Uber's crap, but there was just so much hype around this stock that it was going to go to the moon, and it just traded sideways, and then boom, it just fell out of the sky. And that goes same with a lot of what is the Peloton? What is it? Is that Peloton? It did okay. Like, we own some Beyond Meat, which did crazy fantastic, but then kind of it's been trading a little blah, and we actually bought it around like 75. So we'll see what happens there. So that wasn't like, and the biggest concern was the WeWork deal. Like, people did not want, if that would have hit the market, a lot of people were hinting or projecting a pretty substantial correction, because that was just gonna, there's only so much money in the world, and for people to get into new stocks, they have to sell some of their higher earners or kind of offload some other positions to be able to buy these new IPOs. So if all these IPOs are coming out are playing crap, it's going to be very difficult to get high quality IPOs in greater markets. And then this one, I don't know how I feel about this one. I don't really agree with this. And the technology such as Okta, Copa, Zendesk, and Five9 need to change their names because no one knows what they do, which I think is kind of a good thing. Like, the less the people know, like within the business of IT or even software or SaaS business, they know what all these probably do. We're just going to go look at individually of all these stocks. So the very first one, which we have owned in the past, which is Okta. Again, these are all going to be like hyper growth stocks. These aren't going to be your dividend plays. A lot of these companies don't actually make money yet or profitable. They're just reinvesting their money into the business on research, product, and marketing. Okta overall, it had a fantastic run. We bought it literally around like 60, like this correction here, and we rode it up to like 100, which was like right around here. And I think I sold it right before the quarter, and then I missed this, I don't know, 40-point run, and then another quarter missed. I thought about buying more, but that's when a lot of issues were coming about the market and things like that, and I didn't really want to buy an Okta like that. Then we got Copa. It's like a cloud-based management system. So that is COUP. This thing is looking a lot better than Okta. It's just kind of been, it's a little bit, it's sloppy as well, but it hasn't broken through the 200. So that's still a positive trend, doing air quotes. It has been slightly holding the yellow line, but that being said, this has been trading sideways here, because you can basically see the range of like 156 and like 125 in and around here to potentially go higher. Like, again, if this moves, someone else sells everything else. Then we have PagerDuty. This is another like a SaaS company which delivers like for the DevOps and the IT department to prevent like impacting of incidents. So they use like different various softwares within your servers and your end users to see if there's any vulnerabilities and so forth. Okay, let's go here. So that is PD. Ooh, that one's terrible. That's yeah, that's a clear downtrend. It's kind of been rounding out here, but that's a tough. That's a clinker there, boys. That is not a good one. Zscaler. It's another cloud-based security company. Again, like Jim Cramer said, there's so many of these cloud security companies. Like, I don't think everyone kind of knows Palo Alto Networks, but there's just so many of these other guys that are just kind of hit and miss. And this has just been, they made money on this quarter, but I guess their outlook was terrible. Like, that's just, they clearly lost faith here, because that's a terrible move, boys. Yikes. This is, ugh, I won't want to touch that. Below the 200, this is just a zig. I don't want to touch that at all. I want to mess this one up. Lavarno Health, LVGO. So this is like a data science company that forces on diabetes management with technology and coaching, which is, I kind of like this. This is not a pure software play. This is kind of like on the health sector side. Pretty interesting. I want to see. This is interesting. Again, this is newer this year, clearly. Kind of sold off, made a better bottom. Like, this is what I kind of want to see in Uber kind of come out, break above the 21, and then continue to go higher. Like, this hasn't even been trading for like 200 days because there's no line yet. But this pattern right here is very not so good looking. Everything's kind of pointing down, not really digging it. Let me see. on the volume. Yeah, I don't want to. That's. Sorry, guys. I can't touch that either. That's terrible. 5.9. Alright, so let's see. That is. Oh, that's a weird symbol. FIBN. And this one is, again, above the 200, which is better than the other guys. And it's above the 21. That's really good. But it's just been so choppy. It's literally moves pretty heavy on quarters. Like, this is pretty steady. Like, if you wanted to build a small position of this, Wednesday, they don't have the next quarter out. They are making money. That's great too. It's kind of been consolidating, which is not bad. Again, it's so hard to do technical analysis now, just due to such a low volume. And then last but not least is Zendesk. Zendesk is like a ticketing management system that offers a different suite of, basically to help companies perform customer data, customer interactions, and developing a great interface for the customer and then their staff as well to be easily maintained. And I traded this stock way back when, not even longer ago than that. It's been around for a while. Yeah, it's been a great thing, and then like that crash of last year kind of happened, and then it kind of rebounded, went up pretty substantially this year. But again, all these growth stocks, literally everyone just dropped out at in the summertime, and then they really haven't came back. So it's very hard to own these. Going forward, I think this is a great company. I would be like looking into the numbers more and the fundamental side, and then we'll just have to go from there. So that's all the stocks that he mentioned there. So let's go back to number 11, which China starts playing ball on trade. Again, everyone wants this to happen. Basically, to start buying some of our pork and be able not to hack our systems, to all kinds of different things that we all live on this planet, and basically we just want everyone to kind of get along. And last, Boeing fixes the 737 MAX issues and gets the plane certified to fly again, which I would love this too, because we actually own the stock a couple days ago here at the bottom at like 330 here. They just fired their CEO end of this year, and they are doing everything they can, they say, to get that plane fully operational. And a lot of predictions are pointing at potentially this coming summer, all these issues will be fixed, and all 450-ish planes will be fully operational again. With the firmware update of some kind. Guys, thank you so very much for watching and listening to my horrible voice. Again, I always kind of get sick during the holiday season, but thank you so much for watching. Don't forget to hit the like button, subscribe if you like the content, and again, I'll catch you guys on the flip side. This is Ken from the Dyslexic Investor signing off. Peace.